Okay, recording is on. Today is Monday, March 7th. This is the 12:30 p.m. section. So today we're going to primarily go over homework 6. But before we do that, which is the Merck assignment, we are going to talk about a few of the upcoming logistics. So I'll start with Wednesday, March 9th. As I said in my announcement, Bloomberg will be here for all sections, including your class, the whole day. And this is the Bloomberg University team. They've been a great partner with us over time at the university, and they're coming for 2 reasons. One, they're going to do kind of a recruiting event in each of the classes. So I checked with them last week. This is the university team at Bloomberg that's responsible for university hiring. So if you want a job at the company or an internship at the company, these are the people that do that hiring, right? And as of last week, they still had full-time positions available, and they also had internships for this summer still available. So that's one thing that will be a good opportunity for you, because not only does Bloomberg recruit at the University of Maryland, but they specifically recruit out of this class. So we have a lot of former students in this class that are now working at Bloomberg. They might even bring one here on Wednesday to talk to you about that. But if you're interested, it's a good opportunity to talk to them. And if, let's say, you're a rising junior and you're thinking about something for next year, this is the team to stay in connection with for either another internship or, again, a full-time position longer term, right? So that's going to be the first half of Wednesday's class. They're going to be our guest speakers. The second half of the class is going to be advanced terminal training. They're going to go much further than BMC and talk to you things about, okay, given that there's a war going on in Europe and all of these sanctions, it's having big impacts on different segments of the market. How can you use the tool to understand that? Okay, and they're going to talk to you about some very specific things that you can do there, as well as tracking your portfolios on the Bloomberg Trading Challenge. Okay, so want to make sure we represent well. It's a mandatory class. Please have your videos on as much as you can during the class and take advantage of this opportunity. So that's going to be Wednesday. Okay. Monday, March 14th, 1 week from today, will be the midterm exam. It's 10% of your semester grade. Okay. So just to clarify, what is the midterm exam? The midterm exam, which again, I'll go ahead and share my screen. You will take here on ELMS. It'll be right here under assignments. That will be the midterm exam. Okay, 10% of your semester grade, 10 points. Now you'll take the exam during the class time that you're registered for. This is the 12:30 p.m. section. So the exam will be available 12:30 to essentially 90 minutes to do it until 2 o'clock on that day. You must download the file for the midterm exam. It'll be available right at 12:30 for your section. Again, you'll have to then convert the statements in that file, which we'll talk about in just a second, and then you'll upload that file before the end of class, right? So that's the midterm exam. If for some reason that you are visiting this class, and this is not your regularly scheduled class, you must take the midterm exam based on what you're registered for in ELMS. So the only people that are going to see the exam at 12:30 are the people that are registered in section 401 for the 12:30 class, right? So again, you have to take the class, take the exam based on the time that you're registered for. And it'll be a 90-minute exam, okay? So somebody's asking, are there any questions on the midterm? And the answer is no. Midterm is going to look a lot like your previous homework assignment for financial statement conversion, okay? Matter of fact, I put into the files folder 2 files, and it's called the practice midterm last week. And these were historical midterms. They're going to look a lot like these. You're going to get basically a data file on your midterm. Okay, it's going to have income statements and balance sheets with all the 1, 2, 3, 4s labeled. In that file, you will create 4 new tabs: TII, TFI, CFI, economic profit, that convert and balance. You'll then submit that file back. That's the midterm exam. So there are no technical questions on the midterm. It's just the conversion, right? And there's no analysis that you have to do on the midterm. It's just the conversion, okay? It's an individual exam, okay? It's open notes, open book. Obviously, you'll need a computer to do the exam because you're taking this from home, but basically you'll take it during the class time that you're registered for. One other word about the midterm exam. Solvers are not allowed. Not only will you get a 0, but you'll go to the honor council for an honor code violation. So what is a solver? You cannot take any data out of the midterm exam that you download and copy and paste it anywhere else to do work, and then copy and paste a solution back in. You must work in the file that I give you. You will download the file I give you. You will create new tabs in the file that I give you. You will convert the statements in those new tabs in the file I give you. Once you've done, you'll upload the file I gave you back to Elms. There is no reason to use any other file, okay? That will result in a 0, no questions asked on your midterm, and likely a recommendation to the honor council, all right? Because unfortunately, a few years ago, there were some students who created the equivalent of a solver, and you could take the data out of the midterm exam file, you could put it into their file, it would convert all the statements for you that balanced, and that gave you a solution, okay? That's obviously versus a huge academic violation, but nonetheless, I realized that there are solvers out there in the community, okay? And they were selling these. So basically, solvers are not allowed, right? So in that file, which will have a digital fingerprint, all right? So if you don't turn in the file that I give you, we're gonna know that you didn't turn the file that I gave you, right? And that's gonna be very bad for you. So there's no reason to do this. That's just cheating in another form. And so therefore, just go through the process. You know what's coming, you can convert. Now you can use these other files as reference. I don't have a problem with that, right? You can reference what's in those files to look at, but you still got to convert everything in the file itself, yourself. This is not a group project. You can't be talking to somebody over chat, working on it collectively about how you're doing this. This is an individual midterm exam, and you'll have 90 minutes to do it, okay? So that's next Monday. Questions about the midterm? Also, next Monday, the first half of the Bloomberg Trading Challenge ends, which we'll come back to in a second. And then next Wednesday, you will make your second team presentation, which is here. And that is group case 2, which is going to be on the group project historical analysis. Basically, data's there now. It's going to be an ROIC tree and a CFI analysis and presentation on Nokia. All right, so I'm giving you their ROIC tree, giving you their CFI. As a team, you will analyze and present it. Think about 5 minutes per each part of the presentation. So 5 minutes in ROIC tree, 5 minutes on CFI. We have 6 teams. All 6 teams will present, and you will get a grade at the end of the day. Okay. Now, in addition, there will be peer reviews on this group project historical analysis. So you're going to present as a team. You'll decide who on your team is going to present on behalf of the team, but the entire team needs to create that presentation. If the entire team didn't create the presentation, then the peer reviews, you should say so, and those people will get 0s. And I've already been enforcing that on the first set of group projects. Okay, so I don't want to see that happen to you. So there should be no ambiguity that everyone needs to participate in creating these presentations, whether you're presenting or not. You can decide who is presenting on behalf of your team, but you all have to help create the presentation that is presented. That is group case 2. That is Nokia. And again, we'll talk a little bit more about the expectations based on the Merck assignment about what you have to cover in your presentation. But you'll need to submit a PowerPoint on behalf of the team before class starts Wednesday morning at 7 a.m. And then that's the file that you're going to be presenting during class. So make sure everything that you present is in that file. Because if you're presenting it and it's not in that file, you won't get credit for it. Okay? And so again, it's the ROIC tree and the CFI. Now, in this file on Nokia that you'll download, I've actually given you the Excel version of the file. Here it is. So this is the ROIC tree in Excel. This is the CFI in Excel. The reason I gave it to you in Excel is to make it easy to copy and paste into PowerPoint. And if you want to copy like parts of it into one PowerPoint, parts of it in another PowerPoint slide, you have the ability to do so because you have the raw data here, right? Now, two things. One, these are in euros. Nokia is in euros, not dollars. So remember that when you're going through your presentation, right? There's nothing different about doing the analysis. Just the dollars, talking about euros, percentages are still percentages, right? The other thing to know about Nokia and all of this information here, here's the ROIC tree and the CFI of historical data, is you did an EIC presentation already on Nokia and its two industries. You need to link back to this spreadsheet, the data, to the real world. Okay, so, and again, I'll give you examples of this in a few minutes, but you can't just say a bunch of numbers and get credit in this class for this assignment, right? So just repeating numbers does not equal credit. Not using numbers at all, you'll get a terrible grade. Okay, so in addition to using numbers and connecting to the real world, you got to connect dots. You got to do real analysis when you do this. You just can't just read a bunch of numbers. Right. But nonetheless, that's going to be next Wednesday. And then after that, you're on spring break. So then enjoy, have fun, be safe. And then when you come back from spring break, we'll then get into the third section of the class, which is the valuation. So if you don't know how to use Excel, trust me, we're going to be using a lot of Excel in the second half of the semester, and you're going to become intimately familiar with how to use Excel because we're going to start building and analyzing companies in Excel. Okay, so that's going to be the next section of the class that is coming up. All right, now let's talk about the Bloomberg Trading Challenge. So as I said, next Monday, the Bloomberg Trading Challenge ends. So here, the first half. Let's go into Bloomberg very quickly. So let's say that we look at idea or team message, see where we stand as of today. So this is section 401. So the way that you're going to be ranked is on portfolio value. That's where it would end if we ended today. So the first thing I'm going to check is, did everybody do 10 longs? Everybody here did at least 10 longs, so that's great. Is everybody have $300,000 less of cash? This team is about to be disqualified. Okay, they have more than $300,000 worth of cash. So even though they have more than 10 longs, they will be disqualified, and all of their team members will not only get a 0 on the project, but also will not be able to opt out of the final exam. Okay, so when they are disqualified for not following the rules, that will be the consequence. This is your one and only warning to get below $300,000 by the end of today. Okay, if I see it tomorrow above 300,000, you know the consequence. This team is cutting it really, really close. So they're just barely following the rules. This team is clearly not following the rules. So they will be disqualified tomorrow from the competition. All right. Now, back to this. If the competition were to end today, the way it would work is in order: 5 points, 4 points, 4 points. Sorry. 5, 4, 3, 2, 1, disqualified. Okay. So basically, that's how the competition would end if it were ranked today. And you're going to be ranked on portfolio value. Now, right now, the markets have been brutal out there, and a lot can change in the next week. There's a lot of volatility in the marketplaces. We only have one team that's in the black in terms of return. All the other teams are in the red. But again, doesn't matter. You still have to trade, and you still have to stay in cash. You can't be in cash. Still have to stay in equities. So despite the one team not following the rules and about to be disqualified, all the other teams seem to be following the rules, and that you have to make sure you continue to follow the rules for the last week of the competition. Okay. Now, next week on Monday, when you get graded, I wouldn't liquidate your portfolio because, like I said, liquidating your portfolio will just put another team into the same position as the team that's about to be disqualified. But basically, you still have to stay in cash. I'll just take a screenshot of this at the end of day next Monday, And then whoever is in first place will get the 5 points. And whoever's in last place will get the 1 point, right? It's relative position on that day. So again, you don't have to go to cash to change your relative performance. Now, what will happen at the end of the day next Monday is I will then clone the network, and you'll start essentially a new trading competition for the second half of the semester with the same teams, with the same team captains. You'll just start back at $1 million with empty portfolios, and same rules will apply for the second 6-week sprint. Okay, so this one will just be here, and then you'll see another one, and the major difference will just say 2H instead of 1H for the second half of the semester. Okay, but I won't clone the competition and start that until next week. And then I'll run from next week until the end of the semester. Okay. Questions about the trading challenge?
So all teams start from scratch again at $1 million. We don't get to keep the same positions we have now.
That is correct. Everybody resets to $1 million, and then you have a second half of trading. Now you can buy similar positions. Nothing to stop you from that. But yeah, the second half is just as if you started with scratch with $1 million. So that way, if you're in first place, you reset. If you're in last place, you still reset. Everybody goes back to a level playing field.
If you were to get into like third place and get 2 out of 5 points, are you still able to opt out of the final?
Unless you were disqualified, which this last team is on the verge of being disqualified. It doesn't matter what your grading is on the trading challenge. It does not affect the final exam opt-out. Those are the only individual, with the one exception that if you get disqualified from a team project, then you can't opt out. So this entire team is not going to be able to opt out of the final, and they're going to get a 0 for the trading challenge for not following the rules. But assuming that they take my warning very seriously and actually start following the rules by tonight, then I won't disqualify them, and they can still potentially opt out of the final exam. Other questions? All right, so let's talk about homework 6. So again, for assignments, homework 6 is right here. This was the Merck analysis for the ROIC tree CFI. Let me just pull up the ROIC tree. So again, just like in your Nokia case, this were Nokia, you would be doing 5 minutes in the ROIC tree, approximately 5 minutes in the CFI. What do you need to cover? So I'm going to start out with bad. What would be really bad to your grade, whether you did this on homework 6 in writing or whether you did this next week in your presentation? End of year ROIC went up by 22.8% over 5 years. Cash tax rate went up by 26.1% over 5 years. Pre-tax ROIC went up by 29% over 5 years. The operating margin went up by 21.9% over 5 years. Invested capital sales went down 5.5% over 5 years. That would be a terrible, awful presentation with a very poor grade. Why? Because you didn't say anything. You just read a bunch of percentages. You didn't even read the numbers. And you didn't connect any dots showing how that impacted any other item on this tab. And that would lead to a terrible grade. It would be just insulting to the project. So that will not be good. In addition, let's say you did this. End of year ROIC went from 9.5% to 11.7%. Cash tax rate went from 15.4% to 19.4%. End of year pre-tax ROIC from 11.2% to 14.5%. Operating margin went from 13.5% to 60.5 cents. And invested capital sales went from $1.20 to $1.14. That would also result in a 0 in your presentation. Because yes, you were reading numbers. You might even said something like, at the end of your ROIC went from 9.5% to 11.7%. That was a 22.8% change. But just reading numbers in and of itself, like, I mean, okay, so great. You have the equivalent that a 5th grader would do on this assignment because they could read numbers too, okay? And they could write down numbers. That's not the assignment, right? So what I'm trying to illustrate to you is that, and just listening to me, like if I'm just reading a bunch of numbers, and you're listening to this, you're like, okay, he's reading numbers on a screen. Where's the analytics? There's no analysis. So that's the point. You have to do analysis. You have to connect dots. You have to show relationships between these numbers, and you have to tell me what those relationships are. They're not going to be assumed. That is what's going to be critical to your grade and good real world analysis that you'll eventually do when you work for a company. So what is good? You have to cover, as part of your grade, all three parts of the first level of analysis. You can't just cover one, you got to cover all three, right? Same thing, when you get to your second level analysis, you have to cover all three of these income statement drivers of operating margin. You have to cover all three of the balance sheet drivers of invested capital to sales. Failure to cover any of the drivers, skipping over the drivers, will result in point deductions. In addition to reading numbers, you have to do two additional things. Number one, connect it with other parts of the tree to show how those drivers affect other things. And number two, tie it back to the real world. Like if there's a big change in a number, you should, because you've done an EIC and you are a group project, you should be relating it back to things that are happening in the real world for Nokia or whatever company that you're analyzing. In this case, it would be Merck. So back to our analysis. Merck in 2016 had a 9.5% ROIC. By 2020, it's 11.7% ROIC. It went up by 22.8%. Let me tell you why. But before I do, I also want to point out that it peaked at 2019 at 20.1% ROIC before falling to 11.7%. So it wasn't just a straight line up over the 5 years. It kind of curved up to 2019 and then went back down. So even though it's up over the 5 years, the highest was not 2020, the highest was 2019. Now, when we look at the tax rate started at 15.4% in 2016 and went up to 19.4% by 2020. That increase in tax rate should have resulted in a decrease in after-tax ROIC. Notice the connection. It didn't. The after-tax ROIC went up from 9.5 to 11.7. So it wasn't because of the tax rate. The tax rate was working against that. So all of the improvement in the after-tax ROIC, notice another connection, is in the pre-tax ROIC going from 11.2% to 14.5%. We also noticed that in 2019, it went from 11.2 in 2016 to 23.5 in 2019 before falling to 14.5% in 2020. So the pre-tax ROIC peaked in 2019, just as the after-tax ROIC peaked in 2019. Okay, so what are the two drivers of the pre-tax ROIC? Notice the connection. One is the operating margin. The operating margin in 2016 was 13.5% or 13.5 cents per dollar. In 2020, it went to 16.5 cents per dollar. That's an increase of 3 cents per dollar over those 5 years. The increase in the operating margin improved the pre-tax ROIC. So that's one of the reasons the pre-tax ROIC went from 11.2 to 14.5 is the 3 cents increase in operating margin. But again, it wasn't a straight line because the operating margin peaked in 2019 at almost 25 cents per dollar before it fell to 16.5 cents per dollar in 2020. We'll come back and explain why in just a second. Looking at the balance sheet drivers, invested capital to sales. In 2016, it was $1.20 of invested capital per dollar of sales. By 2020, it fell to $1.14 or $1.138 of invested capital per dollar of sales. So that 6 cents approximate decrease in invested capital to sales was the other reason why the pre-tax ROIC went from 11.2 to 14.5. Both the improvement in the operating margin and the improvement in invested capital to sales were both favorable to the pre-tax ROIC going up. Notice another connection. So invested capital to sales also, like operating margin, was not a straight line. In 2019, invested capital to sales bottomed out at $1.05 before rising again to $1.13.8 in 2020. So clearly 2019 was an outlier year. It was the year that Merck made the highest profit margin operating margin at 24.8%. And it was the year that Merck used the least amount of balance sheet to drive $1 of sales at $5.3. Okay, so something happened between 2019 and 2020 to change that, because between 19 and 20, the margin fell from 24.8 to 16.5, and the invested capital sales went up from $100.05 to $1.14. Okay, and that's why the pre-tax ROIC went from 23.5 to 14.5 between those 2 years. I'm going to move on and talk about the second level analysis and explain why the operating margin went from 13.5 to 16.5. There were 3 drivers. The first driver was gross margin. Gross margin went from 0.788 in 2016 to 0.753 in 2020. That was a 4.4% decline. A drop in gross margin should lead to a drop in operating margin. It's not what happened here. Merck's operating margin went up by 3 cents between 16 and 19. So it wasn't because the gross margin went down. That gross margin going down of essentially 3.5 cents should have hurt the operating margin. SG&A between 2016 and 2020 was flat, 51.6 to 51.3, virtually didn't change. Now in 2019, it fell to 45 cents, and then it spiked to 51 again in 2020. So there was a change between 19 and 20, but between 16 and 20, it was flat. So that didn't really change the operating margin between 16 and 20 as well either. So 16 to 20, the entire 3-point increase in operating margin from 13.5 to 16.5 was the reduction in depreciation expense. In 2016, depreciation was 13.7 cents. In 2020, it was 7.6 cents. That 45% drop in spend on depreciation, almost cutting it in half, was the entire reason why the operating margin improved. Looking at the balance sheet, why did the productivity of Merck improve by 6 cents from 120 to 113.8 in 2020? Well, let's look at all 3 conditions. Working capital. Working capital went from basically 1 cent to 0, right? So that reduction of the investment in working capital was favorable to productivity, okay? So 1 of the 6 cent decline, 1 cent out of the 6 cents was improvements in working capital. PP&E to sales went from 30 cents per dollar in 2016 to 41 cents per dollar in 2020. Over that 5-year period, Merck is now spending 11 cents more on PP&E to drive $1 of sales. So looking at invested capital, that's not why the invested capital went down. Matter of fact, if they're spending more on PP&E, invested capital sales should be going up. Okay, so spending a lot more on plant. So really, almost all of the reduction in invested capital sales was in intangibles. In 2016, Merck was spending 89.1 cents on goodwill and intangibles. By 2020, that had fallen to 72.6%. That was an 18.5% decline. That's why the invested capital to sales improved so dramatically. And most of the improvement happened between 2016 and 2019, where it went from 89 cents down to 72 cents, right? And it kind of leveled off between 19 and 20, right? Now that leveling off offset, that reduction, I should say, in the first 3 years of intangibles, kind of offset the increase in PP&Es, right? So as they were spending more on property, plant, and equipment, they're spending a lot less in intangibles. Now that leveled off in 2019 and 20, which is why the increased spending on PP&E to sales in 19 and 20 from 34 to 41 actually caused the overall invested capital sales to go from $1.05 back to $1.14. Because when the intangible improvements leveled off in 19 and 20, staying at 71.8 and 72.6 respectively, that extra spending on PP&E caused the invested capital to sales to go up to 114 from 105. So now that I've gone from left to right, I summarized going right to left. So in summary, looking at a decline in depreciation from 13.7 cents in 2016 to 7.6 cents in 2020, and a reduction in spending on goodwill and intangibles from 89 cents to 73 cents over that same period of time. resulted in a 3% improvement in operating margin from 13.5% to 16.5% between 16 and 20, and a reduction in invested capital to sales from $1.20 to $1.14. And both of those resulted in a drop in the pre-tax ROIC combined from 11.2% in 2016 to 14.5% in 2020, which was partially offset by a rise in tax rate from 15.4 to 19.4. But overall, Merck's after-tax ROIC still went up 9.5 to 11.7. That's what you're going to have to basically cover in 5 minutes. With real world references. Here's where the real world references come in. In 2019, 2020, there's a surge in PP&E. Why? What is Merck doing that's causing that surge in PP&E? You should be able to answer that question at this point as a team evaluating Merck, especially with all the data at your fingertips. And if you looked and did your homework, what you would have found is that Merck expects a couple of new drugs under patent to launch, particularly large molecule drugs, in the upcoming years. So they are building capacity and spending on SG&A to prepare for the launch of those drugs. That's what's going on with the increase in SG&A between 19 and 20 and the increase in PP&E to sales between 19 and 20. They're preparing to launch and manufacture the drugs in-house. They're spending the money to do that now. So you need to have highlighted that when you talk about why these numbers are changing in your presentation. All right. And so what happened was Merck was doing really well in 2019, improving its margin, and then it had to put money in SG&A increase to basically spend to get ready for these launch drugs. That's why the margin went from 25 to 17. Same thing. The productivity went from 105 to 114 because they spent a lot of money on plant, going from 34 cents to 41 cents. So they were ramping up to get ready for production. Sales haven't occurred yet, haven't made the profit yet, stressing their financials in 2020 for hope of a better future in 21 and beyond. All right, questions about the ROIC tree, what you need to analyze, what was happening with Merck, what you should have submitted in your papers for this week. All right, if no questions about the ROIC tree, let's move on to CFI. So again, for the CFI, just like the ROIC tree, you have to talk about all 4 sections. You have to talk about why these sections are changing and connect the dots to the real world. You have to use numbers as you're doing that, okay? And you have to talk to me about the trends over the 5 years that led to the total. So you spend most of your time on the total, but you got to highlight a few of the trends as well. And if some of those trends are important to the company, again, connect the dots to the real world. Right? So let's start analyzing. And as we've said, we start with the free cash flow. So over the 5 years, Merck had a free cash flow of $27.7 billion, 27,662.4. How did it generate the 27.662? Well, it generated almost $51 billion worth of gross cash flow, right? 5866 over the 5 years, but it wasn't a straight line. Okay. The gross cash flow peaked in 2019 at $13,547.5 million before receding to about $10 billion, 93.2 in 2020. Right. No plat also peaked in 2019 at 9.9 billion before falling to 6.4 billion, and depreciation started at 5.4 billion in 2016 and fell all the way to 3.625 billion by 2020. Okay, so we saw basically profits of 29 billion, depreciation, which has been reducing over the 5 years, of almost 22 billion, which generated $51 billion worth of gross cash flow from the income statement. Merck reinvested $28.7 billion of gross investment, which averaged out to a 56% reinvestment rate over the 5 years. But its reinvestment was split between working capital and CapEx. Matter of fact, it disinvested in working capital by $430 million. Most of that disinvestment occurred in 2019, $1.363 billion. So really, all of that gross investment was capital expenditures. It was $29 billion worth of capital expenditures. That peaked in 2020 at $7.2 billion. So Merck started a little under $5 billion of CapEx in 2016, and then every year it increases capital expenditures to $5.1 billion, $5.4 billion, $6.5 billion, and then eventually $7.2 billion in 2020. Okay. Now, when we look at the ratio of CapEx to depreciation in 2020, that's almost 200%. So Merck is also suggesting, based on how much it's spending, that it expects more sales in 2021 and probably 2022. That's the reference that we would connect the dots to the real world of the new product launches. Merck is basically gearing up for those new product launches. They're spending money on the new product launches. We're seeing it not on the ROIC tree. We're also seeing it here on the CFI in the free cash flow. So again, after the $27 billion of gross investment, they ended up with $22.179 billion of free cash flow before goodwill and intangibles. They had negative $5.5 billion of goodwill, giving them $27.7 billion of free cash flow. Now, here's the thing. Most of that reduction in goodwill and intangibles occurred in 2016 and 2017. That was almost $8 billion between those 2 years of reduction in goodwill and intangibles. Note in 2019, goodwill and intangibles actually went up by 2264 and 1221 respectively. So they did some small acquisitions in 2020 and 2020. So who'd they buy? That should be something else that you should be disclosing as part of your presentation, because it's clear in 19 and 20, they did some acquisitions. So what acquisitions did they do? So even though over 5 years, goodwill and intangibles went down, in 19 and 20, they did increase them slightly by about $3.3 billion, $3.4 billion. So who'd they buy? So 22 billion of free cash flow before goodwill, 5.5 billion added back from the reduction, and mostly in 2016 and 17 of intangibles, gave them about 28 billion, 27.662 billion of free cash flow to distribute. How did Merck go from 27.7 billion of free cash flow to 42.853 billion of CFI? Well, what happened to the non-operating cash flows? The two big reasons non-operating cash flow increased were they sold off 6.3 billion of non-operating assets, and they decreased their excess cash reserves by 5.5 billion. Now, they didn't do that, all of that in 2020. As a matter of fact, the biggest reduction in the excess cash reserves occurred in 2017 when it went down by 5.8 billion, but they also did decrease an additional 2.4 billion in 2020. Now, when we look at the sale of non-operating assets, they were actually overall reducing their non-operating assets by 6.4 billion, but in 2020, they actually increased their non-operating assets by 2.9 billion. So this was a heavy investment year. Not only did they spend a lot more in CapEx in 2020, they spent more in buying non-operating assets in 2020 as well as starting to do some acquisitions again. So this was an investment year, right? So when we look at the investment rate of 56%, right? On average, yeah, it's about where it was when it started, close to 49. But the other point is they had a couple of big investments here, and 2020 was one of them. And we're clearly seeing that here on the CFI. By the way, they did have some FX gains, $523 million. They had a non-operating gain of $1.2 billion, $945 million of after-tax income, and they had $1.7 billion change from affiliates. So there were other factors that affected the CFI, but the two biggest ones were the excess cash and the non-operating assets, which generated almost 11.8 or call it $12 billion of cash to go to CFI. Okay, so going from 28 to 42 or 43, right? 12 of it was excess cash and non-operating assets. So that gave them $42.8 billion of CFI to distribute. But again, if you think about that CFI, it's a big number, but it wasn't like they were generating an equal amount every year. CFI peaked in 2018 at 13.7 billion. By 2020, CFI was only 2 billion. And we can clearly see why, because in 2020, the free cash flow plummeted to $1 billion. And they didn't really have a lot of non-operating cash flow because any drawdown of 2.4 billion in 2020 of excess cash was offset by purchasing $2.9 billion of non-operating assets. So $1 billion of free cash flow became $2 billion of CFI, right? So most of that CFI was really the first 4 years, okay? Not in year 5. So again, more evidence that something changed between 19 and 20 in Merck. Now, how do they distribute the 42.8 billion of CFI? We now have to talk about all of the debt and equity changes. So they basically paid 2.846 billion of after-tax interest expense. Makes sense given they had debt every year. Now they actually increased their debt by 7 billion. But again, when did they do this? Really, it was 2019 and 2020. Because in 2019, they increased their debt by 2.2 billion. And in 2020, it went up by an additional 6.1 billion. So most of that debt increase of 7 billion occurred in 2020. They also generated $1.726 billion by not paying all of their pension liabilities to their employees. So they owe some more retirement-related liabilities to their employees of $1.7 billion that got some extra cash. Most of that was actually $1 billion increase in 2016 and a $670 million increase in 2019. Now, what do they do with all this debt? All right, and non-payment of the pension? Well, 27.3 billion, 27.4 billion was common dividends. Now that started out at 5.1 billion a year, and Merck increased the dividend every year. Went from 5.1 to 5.2 to 5.2 to 5.7 to 6.2. Okay, so Merck was clearly increasing their dividend over the 5 years. Share repurchase was 22.6 billion over the 5 years, but that was more volatile. 2018, they bought back $9 billion worth of shares. 2020, they only bought back $1.3 billion worth of shares. Now we know that the reinvestment rate plus the payout rate had to equal 100%. So we can clearly see what happened in 2020. Merck cut its share repurchase. They did this at the same time that they were increasing their capital expenditures, right? And they were making a little bit less money. Their NOPLAT fell from 9.9 billion to 6.3. Well, CapEx went from 6.5 billion to 7.2 billion. So increase in the investment in CapEx probably corresponds at the same time with less profits to really why they needed this debt. So yeah, they were borrowing the debt to buy back the stock, but if you look at it more granularly, they were borrowing the debt to fund a lot of the CapEx increases in 2020 and the working capital investments they were making in 2020, okay? Because that was almost $8 billion. So given that they only had $1 billion worth of free cash flow, how do you fund all that? They use the debt to do that. That's the increase of the $6 billion worth of debt, right? That's really what's happening in 2020. So yeah, over 5 years, we put it all together. It looks like they were borrowing debt to fund back share repurchase. But if we look a little deeper, we can see they were funding debt to continue their product expansion. So again, Merck is clearly sending signals that they expect their sales to grow in the next couple of years. And that's something we could check and see now that we have 2021 data to see if that trend had actually played out. But that's your CFI analysis. That's what you need to talk about. And those are some of the things you need to link back to the real world.
Oh, excuse me?
Yes, go ahead.
Can you go over the analysis of the common dividends again and just how they tie into the rest of it?
Well, again, CFI is positive, which means they're distributing cash. So the question is, how are they distributing the cash? Well, if I look at the equity part of the CFI, they're paying dividends. So those are outflows. And the point about the dividend is Merck's dividend is pretty consistent and it's growing. Okay, started at 5.1 billion, ended at 6.2, but it's not lumpy. Like the share repurchase is kind of lumpy. The dividends are not. It's consistent and it's growing over time to get to the 27 billion, right? Now, the share repurchase started at 3.4, went to 4, went to 9, went to 5, went to 1.3, okay? So here it's almost like a kind of bowed. And what I'm telling you is, why is this bowing? Well, here is when reinvestment, particularly negative working capital, was a little bit lower than here. So reinvest less. And it's also here when their profits started to surge. Profits surge, pay more dividends, buy back more stock. Here, profits are falling, investment is rising. I don't buy back as much stock because I have less cash to distribute. Okay, so you can kind of see how that's changing on over time. So this is what I mean by connecting dots. You can't just talk about numbers independent of each other because they actually start to impact other things. And using these numbers, you can start to draw conclusions on where these things are starting to trade off, for example. And then you should explain why they're starting to trade off. Other questions about any of these statements, Merck or otherwise? All right, well, as I said, this is what you have to do for Nokia. The only difference is you're going to have 10 minutes to do all of this. As I said, think of both statements, about 5 minutes each. You need to use your time, got to cover numbers, can't just repeat numbers, got to cover all the sections, got to relate this to the real world. The only way you're going to be able to do all that is you're going to have to practice. So I wouldn't come in here next Wednesday, the very first time, trying to do all of this all at once, right? You'll quickly realize that you'll run out of time. You won't cover everything and won't be good for your grade. So I'm trying to set you guys up for success. You got a week and a half to work on this. It's a team project. Make sure all the members of the team are meeting this week to start working on this project. Matter of fact, it is 1:20. I'm going to give you back about 10 to 15 minutes of your lives here in a minute so that you can actually start meeting with your teams today. I would encourage you to do that right now. I'm going to end class a few minutes early so you can work with your teams to start planning out your next week and a half for Nokia and how you're going to collaborate on getting that presentation together, right? And then prepare that presentation so that when you submit it and you're ready to go next Wednesday, you have the highest chance for success. I'd like to see everybody succeed. Okay. So if there are no other questions, so again, just a reminder, Wednesday, Bloomberg's here. Please come and take advantage of that. Monday is your midterm exam. You take that individually. Monday, the first half of the Bloomberg Trading Challenge will end. And Wednesday of next week, you'll be doing these presentations. As soon as the presentations are done, I'll give you grades at the end of the day, and then you're off for spring break. So enjoy a wonderful, happy, hopefully nice, warm spring break. And then we'll come back after spring break and we'll get into section 3 of the class, which will be evaluation. So that's what's upcoming. And in the interim, if you have questions about any of this, see the TAs. They are there this week, Thursday, Friday, to answer any of the questions that you may have. And work with your teams in a few minutes after class here today. All right. See everybody on Wednesday when Bloomberg is here. Have a good day.
Oh,
Thank you.
I have a question.
Yes, go ahead. Somebody said they have a question? I can't see who had the question. Who has the question? You have the question? Okay.
Yep.
Go ahead, ask your question.
Hold on, I'm trying to get him on camera. Okay. Is it possible I could talk to you in private?
Sure. Let me go ahead and stop the recording.